Greetings, members, one and all of this Salivation Nation. According to an analyst, we're going to see silver fall to $21 soon. Let's explore. Yeah, I know it's not what we wanted to hear. And obviously, for those who probably understand the mantra, people were saying, well, this provides a buying opportunity. But you know, for many of us, it's a little frustrating. And I can understand that frustration because here is a big organization, UBS, making this call that silver could fall to $21 an ounce as the Fed tightens rates to fight inflation, according to this article here from Kitco.com. We're going to get into this, but you have to understand that we just got some pretty bad economic numbers that could push against this narrative. But let's take a look. The Federal Reserve's imminent move to raise interest rates by 50 basis points next week continues to take its toll on the precious metals. Silver has been a significant underperformer in the last 2 weeks as prices dropped below $26 an ounce. Silver is currently testing support just above $23 and is down 13% since April 18th. So looking ahead, analysts at UBS expect to see lower prices in the near term. May silver futures last traded at $23.04 an ounce. Prospects of higher interest rates are likely to remain a headwind for the metal, said Dominic Schneider. And Wade Gordon, market strategist at UBS, said in the report. A silver price whose upside is likely to be capped gives investors the opportunity to engage in more active strategies. In short, we like selling the price upside in silver for yield. You know, I don't know really how to take that. What is their motivation here? Wanting people to buy silver? I don't know, but nonetheless, you got to take it for what it is. And my guess is this report was probably written before the surprising numbers came out in terms of a shrinking economy. The Swiss Investment Bank is negative on silver as the Federal Reserve tries to get inflation under control by aggressively raising interest rates. They added that interest rates have room to move much higher through 2022. But you know, when you think about it, what they have done before with interest rates and with this rate hike they did before, and obviously it was just a quarter point, but that quarter point really had no effect on the economy. And we've seen now this first quarter report of a shrinking GDP by 1.4%. And so the Federal Reserve is in inflation fighting mode for good reason. Elevated inflation readings in the U.S. are a problem that requires the Fed's full attention. We think this means real interest rate expectations have room to march higher. In the case of the 10-year U.S. TIPS yield, and move into position territory marks our base case, is what the analyst said here. Not only are interest rates expected to move higher, but UBS also looks for inflation pressures to start to ease by the second half of the year, which contradicts our own Treasury Secretary, who admits that likely we're going to see inflation strong through this year and in the beginning of next year. Now think of that for a moment. You know, our Treasury Secretary, who, by the way, was the former Fed chair, she knows the deal in terms of what the Fed can do and what the Fed has done in the past, as she was a Fed chair person, and likely she has baked in to her analysis that the inflation is going to continue to run hot through the next 11 months or so. And so I think I believe her, even though she's a modern monetary theorist. And certainly she is one of those that believes in easy money policies. But even she, along with Larry Summers, another analyst, who are not necessarily on the supply side of the economic equation, those who believe in tightening and responsible fiscal policy. But nonetheless, even she has admitted that we're going to see inflation run hot through this year. But UBS, this Swiss bank, believes differently here. With real interest rate expectations on the rise and actual inflation leveling off in the coming months, while economic growth moderates, the backdrop for a silver price rally is diminishing, the analyst said. As a result, we expect inflows into silver ETFs to stall and start to reverse when signs become clear that inflation is rolling over more materially. For the silver price, this means that a sideways trajectory in the second quarter is most likely to be followed by a step down, with the metal heading towards $21 an ounce. Now, I will say this, on the backdrop of the parts of the analysis that I disagree with, I do believe it is a possibility that we could see silver move closer to 21 or maybe even into the high $20 range. In other words, maybe $20.50 to 75 to 80 cents. I just do not rule that out at this point. Silver is so volatile, especially compared to gold, that it would not surprise me at all to see silver make a move, at least in the short term, in that direction. Now, that notwithstanding, I am actually hanging on to my prediction for the end of the year for silver, which right now sounds pretty crazy. My prediction for silver by the end of the year is a solid $29 an ounce, $1 shy of what I had predicted last year. I was way off, and I may be way off this year too at the rate we're going. It is frustrating. It's frustrating for me. Hearing this report, which, by the way, I do take it seriously. I take all reports, especially if they're somewhat bearish on the metal. Now, obviously, this is an investment bank, and one could make the claim that, or an analysis to say that, hey, well, yeah, it's a big bank. Of course, they're going to say that. They want to get the narrative in the other direction. It's in their best interest for silver to be pushed down and have analysis that leads in that direction, because they're of the mind that, hey, they want people not to stack the metal and they want people to get frustrated and give up. I can understand that sentiment. However, I think that in reality, we have to be real in this world we live in, and silver has not performed with the timing that many of us thought it should have, especially when we saw $26, $27, $28 silver regularly during the pandemic. Now it's moving the other way, and things are worse economically. And now with inflation running hot, we've had inflation entrenched now long enough that it seems to me we should see silver price rise higher. However, there are other factors that come into play that you have to take into account and be patient with. And patience is key. And buying opportunities are there. However, I can understand the reluctance, because that's what they all say. We all say it. I've said it. Analysts have said it. Silver bulls have said it. Hey, this is a buying opportunity. Just buy more silver. Well, you know what? My advice has always been this. Don't ever spend money on anything that includes precious metals, that includes gold, silver, platinum, or a car. Don't buy anything that you're not comfortable in putting that money towards. If you have an uneasy feeling when you make a purchase, then don't do it. Just don't do it. Just hold off. But if you are one that has silver in your possession, and you see where things are going, and you're not sure what's going to happen from here on out, and you're nervous about buying, I would encourage you to hang on to your silver. Because if you think it's going to fall even more and you sell your silver, you're going to definitely be taking a loss, especially if you paid a higher price for that silver, especially where the premiums are with silver are right now. Your best bet is just to wait this out, see where the markets go. And why should you do that? Because over the course of a long enough time, it all works itself out. It evens itself out. In other words, silver's price will catch up to the value of silver soon enough. And that soon enough may be next year, maybe the year after that. If you have the luxury of hanging on your metals and holding on, do so. Wait it out. See where everything goes. And I think if you do that, then you will be fine and safe. If you don't feel comfortable buying in this environment, don't do it. Totally understandable. With that being said, I made a purchase when silver was slightly higher than it is right now, thinking that could have been close to the bottom. And the bullion dealer that I made a purchase from was actually very, very good. It had a very good price on the silver that they were selling, and above spot price, and their spot price was lower than other bullion dealers. So I had made my very substantial purchase, at least for me, of silver. I will talk more about that when it arrives and the reasons why I made that move. But knowing I made that move with a full knowledge that, hey, this thing could turn sideways or down, and that very well could happen. This analysis that I'm talking to you about right now about silver is something that I've got to live with this big silver purchase I made. But you got to suck it up sometimes in the precious metal space, especially these days when things don't make sense. But nonetheless, what does make sense is that the dollar is losing value month after month now at an alarming rate, over 1% per month. And so with that being the case, then you can bet your bottom dollar on that. So why not bet on silver? And betting on silver means that you don't necessarily have to buy it, but the silver that you do have, hang on to it. It's going to pay off. It's going to pay off in terms of wealth preservation. That's what it's about. That's what it means to save, folks. And saving is something that when your savings account is something that you don't typically dip into on a whim. You hang on to it for the long haul. So there you have it. I hope this was insightful and helpful to you. I would like to extend a multitude of gratitude to you all for taking the time to watch this video, and to encourage you to please rate, share, comment, and subscribe.